It's time for the MF Corner on the show this afternoon. Today we're going to put the spotlight on service sector funds. Now the services sector is the largest component of our GDP and clearly it's the biggest driver. But can service sector funds really power your portfolio? Let's find out from our expert Dhirendra Kumar, CEO of Value Research, who joins in live and exclusive as always. Afternoon, Dhirendra. The services sector funds have outshone the Sensex in the 3-year time frame and over the 1-year period as well. What drives this performance?
Simply because, financial services has been the driver and, technology has not done too badly. So that has been able to, that has helped their performance. But these funds are 75% into financial services and technology. And I don't see a reason why, if there is a case for, this particular theme, because these funds were actually a creation of a regime, of a time when, funds could mobilize money only if they created something new. So service sector was considered to be a sellable idea. But I don't think it is a credible investment theme. So, most investors can do without it.
Dhirendra, so would you recommend these funds to investors? What should existing investors into these funds do as well?
No, I think investors should, keep away from such a fund because I don't see how they fit into an investor's portfolio. Because if you have, any kind of equity fund, any diverse equity fund, large, mid, small, whatever, you are bound to have these exposures. So these are going to be just a supplementary, exposure. I don't see a role. I don't see a well-articulated role for them. So investors should do without them, and anybody having it should substitute them with a diverse equity fund.
Dhirendra, let's also take in a few viewer queries. First one coming in from M.K. Srinivasan. He wants to know if it's time to exit dividend yield funds. What's your advice?
I think, if this is the only fund, then you should consider exiting because, it may not be a complete portfolio. But if this is part of a portfolio, then I think they have a meaningful role to play. Dividend yield funds may not have a good time if in a runaway market of the kind which we have witnessed in the past 2-3 months. But so that's my take. If it's the only fund, substitute it with a diversified equity with growth and value tilt, style. And if it's part of your portfolio, one of it, then have it.